Since 1947, the World Affairs Council has become the preeminent global stage for world leaders and the public to inform, engage, and debate the most important issues of our time. It's your world. Get to know it.
We're in an era right now where many bubbles are bursting simultaneously. We know the housing bubble has already burst, but we have a broader credit bubble, we have a leverage bubble, we have a commodity bubble, we have a risk-taking bubble, a confidence bubble. There's no question that European banks got very exposed to the toxic assets, as you referred to, but the problem wasn't so much just the simple exposure to the toxic debt, but the leverage on top of that. And whereas at the peak, the average U.S. financial institution had about a 20-to-1 leverage ratio, the average European banking institution had about a 35-to-1 leverage ratio. So the underlying securities were really no different among European institutions and the U.S., but it was the leverage on top of it and in turn the unwinding. And then on top of that, you had a number of individual European countries that had housing bubbles that at least mirrored ours, if not went beyond, UK and Spain being examples of that. Particularly the central banks have been too focused on inflation for too long, when inflation, in my opinion, was very clearly ebbing in Europe. But Trichet and others continue to have their eye on inflation and not on growth. By some measures, the bubble, blew to an even greater diameter in the UK, which ostensibly means that its popping could have a greater impact. And I would agree with you also that there was a heavy dependence on the financial industry. It was, the UK is almost like a big New York City in terms of the impact that the financial industry has. One of the problems, too, is the reliability of economic statistics coming out of China. So I think any of these numbers we have to take with a grain of salt. And a lot of people say, well, at least it's apples to apples, bad apples to bad apples. But they're pretty good at manipulating numbers, too. So I don't even know if necessarily that the trend is valid, but we don't have anything to go by other than their numbers. So the official numbers look at growth right now dropping down to the high single-digit level, about 9%, with the consensus still that it's not going to drop much lower than that, maybe 8%. This is more of a, I'll admit, it's more of a gut feel than anything terribly unique in my analysis, that believes we're probably going a bit lower than that. But it's also a function of the fact that I have been an economic pessimist for several years now. I've thought the U.S. has been in a recession since late 2007, and I've had that view since late 2007. I don't think there's any risk at all of China's growth going into negative territory, but if you go from 12 to 6, that's going to feel quite awful. And I think the reason for the aggressiveness on the part of China and the stimulus package, which, be mindful of the numbers again, that $526 billion stimulus package, which is about 18% of their GDP, 2/3 of it is stuff that's already been announced. And I also think there's the very, very simple question that really, and I know we'll probably talk about currencies and the dollar, but a lot of people, view that there would be this massive move out of the dollar, and my question was always, into what? And I think we're seeing that come to fruition right now. So in terms of liquidity and stability, say what you want to say about the U.S. and the dollar right now, but it's all a relative world, and the dollar, ironically, is back to being the world's reserve currency and the safe haven currency. Well, I already mentioned that I think we're in a recession. It'll be, in my mind, no doubt, much longer than the average recession. The average recession, inclusive of the Depression era, was 11 months. The two longest we had were the early 80s and the mid-70s, both of which were 16 months long, and I think at best will be that length. If I'm right about the start point, it takes us to mid-09 before we might see the bottom, although I happen to think that the fourth quarter, the quarter we're in right now, will be the worst single quarter for GDP. I think we could get at least a 4% drop in GDP. Because, everything is hitting the fan in this quarter. But I don't think we see any kind of meaningful lift in the first half of 2009. Housing is absolutely a key to that, and we're only starting to see some nascent signs of improvement. Ultimately, we're not going to see a floor in prices until we get inventories down, and we're only recently starting to see inventories roll over a little bit.
Since 1947, The World Affairs Council has become the preeminent global stage for world leaders and the public to inform, engage, and debate the most important issues of our time. It's your world. Get to know it.